This is the Algo Futures Trader Weekly Market Roundup. And this week I wanted to talk about the anatomy of a breakout trade. And what I wanted to do is just take a look at Friday. And Friday, here's our automated breakout strategy. It had a breakout to the long side. We avoided that and instead took the breakdown here to the short side. But I want to go through why. First of all, the components of this automated breakout strategy. This is a template that is already built in to the software here. Right. So all you really need to do is, if you want this, you can turn it to automatic trading on. So it's fully automated. It'll execute all the trades, manage all the trades, stops, and everything. We don't recommend that you do that because you'll have better results doing it this way, and that is figuring out what the bias is each morning. Is it long? Is it short? And sticking with the breakouts in that direction. So this shaded blue area, again, that's our no trade zone. So any trades that basically, we're not looking for any trades inside that zone. The market has to either break out above or break out below that zone to even be considered for a trade. Now, we do have some filters. This is the traffic light filter here you see at the bottom. And in order to take a long trade, it's got to be all green. In order to take a short trade, it's got to be all red. And there's parameters for each of those to turn this red. But you can go through our help material to understand all that. I don't want to get into all that here. The point being here is why we had a breakout right off the open to the long side in the MYM here. Why did we avoid that and instead just stick with the short side? So we have a couple of filters that we like to use. And the first, let's just take a look at what we call the gap bias. Now this is our alpha web trader. And this has signals built into it. And you can access this free through our Discord server right now. But this gap filter, basically, you notice it says IGU. Here's like the MYM, here's the YM, the S&P mid cap here, the micro NQ, the NQ, the MES, the ES, Russell, and so on. You see it all said IGU. So that's what we would have seen 9:30 at the open basically on Friday. What that means is we have inside gaps to the upside. That means the market has gapped up. Each of these markets gapped up from the prior day's close, but still inside the prior day's range. All right, so that tells us that there's a high probability that the market is going to want to fill that gap. It's like 70 to 80% of the time the market will actually fill that gap. So these would have all been red. And that means, that gives us an indication when we see that be very careful of the long side. All right, and you can see in my post here in the Discord server, I said here, looks like the inside gap. It looks like inside gap, gaps to the upside everywhere. Be wary of longs early, at least until that gap fills. Now, the other point I made right after that was that the NQ was the stronger market, while the YM was the weaker market. All right. Well, where did I get that information? So if I come back to the gap bias here, notice we have what's called the TrendOmeter, and the alpha bias. The alpha bias will rank the markets from weakest to strongest. Now, at the time in the morning, the Dow here was at the bottom, which meant it was the weakest. And the NASDAQ was at the top, which meant it was the stronger market. And so if we're going to get short, if the bias is short because of the gap, and this, you can see how everything was red here. So that tells us that the markets were weak and to play the short side. Also, our TrendOmeter here, this also, gives us a snapshot. See how it was all basically red here? That was telling us that the markets were weak, stick to the short side. So, and this would also rank them. So at the end of the day, the Dow ended up becoming a little stronger than the other markets, but it was all kind of reversed here, where you had the NASDAQ was the strongest and the Dow would have been over here as the weakest when I posted that. So that's why those two pieces of information told us, hey, inside gap up, tendencies are going to fill the gap, which means market's going to fall from the open. And then The TrendOmeter and our alpha bias also all red, also indicating that if you're going to go short, might as well short the weakest market, which was the Dow, the micro or the mini Dow. And so that's why we stuck with the short side here. And you can see, I mean, it doesn't look like much here, but that's 200 points, basically a drop before we would have got stopped on that. All right, anyway, I hope that was helpful. And you can join our Discord server. The links are below. You can get started with the Algo Futures Trader 7 that has this template that's built in right out of the box. And also we do have the Algo Futures Trader for Ninja 8 that is in beta. All right, so you can download that for free. You can use it as long as you want in sim mode. And then when you're comfortable and you've done your numbers, your homework, and you've got a strategy that works, or if you want the paid version, then you can go on to the full version there. You can trade live. All right, again, hope that was helpful, and we'll see you next week.